be standing. Minister, welcome to the annual meetings. It gives me great pleasure to introduce you to the audience and to welcome you to the 2024 annual meetings. We have half an hour where we will try to cover a few issues that I'm sure many people in the audience would like to hear your views on. I'll be short in the introduction because you don't need introduction, but Minister Aurangzeb has a long and very, I would say, diverse career in leading private sector institutions, in banking, in finance, and now he has the immense charge of dealing with Pakistan public finance and financial issues. When you took over, we at the fund, we were finalizing or we were finishing a short program that helped in the transition achieve certain number of key objectives, stabilize the economy, make sure that the momentum for reform remains ready for the new longer journey. Yourself, your colleagues and your team, you put together a program that the fund supported. And this program that was not only supported by us, but also was supported by several of your partners, starting from the World Bank, as well as also other institutions, but also some of your key bilateral partners. The pillars of the program would allow you, if properly implemented, not only to achieve stability, but also to restore confidence and bring growth back. And I would like to hear your views on how do you see things now that you have been in charge of finance for 6 months?
Yeah. Well, first of all, thank you. It's a real pleasure to be here. The last time when I was here during the spring meetings, we were at that point in time very much looking forward to a successful conclusion of the 9-month SBA. And then we had the discussion that Pakistan is very keen to move towards a larger and an extended program. Now, I'll start with where we are right now. As you just mentioned, all the macroeconomic variables have moved in the right direction. On the fiscal side, we have had a primary surplus after about 18, 19 years. The current account deficit was less than $1 billion end of last fiscal year. And in fact, we have just completed the first quarter where we've had current account surplus both in August and in September. And it's on the back of a stable currency, which has helped us with very strong remittance flows, which continue to date. Of course, the FX reserves, which are now close to 2.5 months of import cover at a little over $11 billion on both sides. I'm very grateful to the governor of State Bank of Pakistan and his team in terms of taking us in that direction and providing that stability. Inflation, which had reached 38%, it peaked there, is now at 7%. And therefore, the policy rate has started moving down. We're down about 450 basis points. But even more importantly for the local industry, the 6-month CIBOR, which is the reference rate, is now at about 14.65%. So for the first time after 2 or 3 years, we see the industry moving in the right direction in terms of the borrowing, and both in terms of capacity and in terms of the actual rates at which it's made available. Now, why did we ask the fund for an EFF, which, as the audience knows, on the 25th of September, the $7 billion 37-month program got approved by the executive board. 2 things. One, to bring permanence in terms of the macroeconomic stability. And the second thing is to execute structural reforms. And the structural reforms have many facets to it, many elements to it. But if I were to prioritize, there are really 3 things. One is on the taxation side, to move tax to GDP north of 13%, so that we can start joining Community of Nations in terms of sustainability on the fiscal side. The other is the reforms on the energy side, both in terms of affordability and availability. And the third thing is the SOE reforms and moving things into the privatization sector. So from my perspective, what has happened over the last actually 12 to 14 months, because Jihad, I would want to give credit to the caretaker administration as well in terms of the rigor and vigor and the discipline that they showed so that we could conclude SBA and then get into an extended discussion with you. So the fiscal discipline that has been shown over the last 12 to 14 months and the monetary discipline which has been shown over the last 12 to 14 months are now beginning to yield results. Early days, we need to stay the course.
Thank you very much, Mr. Minister. How you would answer the question that people may ask, why this time it's going to be different?
I think it's a fair question, given that we've had so many programs and we have had sort of boom and bust cycles. So therefore, it's the right question. I would say, and I've been saying that consistently over the last 6 months, that this time is different because as a country, our hand has been forced. If we don't move towards getting our tax at a sustainable level, which essentially means getting undertaxed and untaxed segments back into the net, whether it's real estate, whether it's agriculture, whether it's a retail distributor chains, or we don't enforce and ensure compliance so that the theft or corruption, whatever you want to call it, this has to go, because otherwise we have to keep on going back to the same for more. Salaried class manufacturing industry, and we are up to here. That saturation point has been reached. And therefore, as a country, we do not have a choice on the domestic side, but to ensure that we continue with this sort of structural reforms. The similar thing on the energy side, because it's such an important part of the ecosystem. We cannot get onto a sustainable growth path unless we fix our energy equation. Now let's come to the external front. Again, we need to understand that the reason why we've had so many booms and bust cycles is everyone loves growth and we want growth. But first of all, there is no automatic switch or overnight switch from stability to growth. We need to understand that. Secondly, what we have seen is that every time we put a foot on the pedal and we sort of go beyond 4%, we run into a balance of payment issue, and therefore we have to, quite frankly, come back running to you as a lender of the last resort. And the reason for that is that the DNA of our economy so far has been import-led and import-dependent. So we have to change the DNA of the economy towards export-led, whether it's everything that we're doing in our industry, whatever we're doing in terms of the FDI, that FDI also needs to come in, which is focused on those industries which lead us to exportable surpluses on the basis of which we can actually get into a sustainable and inclusive growth. Now, it's on that side where you mentioned our friendly partners, countries, and we are very grateful to them for the support that they have shown, not over years, over decades, including the support which has been shown in the executive board on the 25th of September. But now the equation has changed. And because what they're all saying, and these are all public statements, I'm not saying something which you don't already know, investment appetites have been publicly announced. So all of this discussion where we get dole-outs and we therefore can kick can down the road, can't do anymore, because those dole-outs are not available anymore. They want equity investments, board seats. Egypt is a very fine example of how that's been executed there. And I think it's the right thing to do in terms of how they expect to support us going forward in terms of real investments. And from a country's perspective, sustainability in terms of how we want to take the country forward, not aid-led, but investment-led. So to answer your question, two things. Our hand has been forced both domestically and externally, and therefore we have to do what we need to do at this point in time if we are going to move forward.
Thank you very much. I'm tempted to ask you a follow-up question before moving to fiscal and to macro stability. You come from the private sector. You were leading off one of the largest banks, and you were also the head of the banking association. How to transform the Pakistani economy to be more export-driven and to have the private sector enjoying maybe a more competitive environment, and how we bring more investment into some of the long-awaited entities that were supposed to be in the private sector hands. And do you have any specific announcements to make on these things?
I'm not sure about any announcements this afternoon, but I would just repeat what I've been saying since the time I took oath. And I think, I'm very clear that the Prime Minister, the Cabinet, everyone is totally behind this, that the government has no business in being in business. Government has to provide the policy framework and policy continuity. It's the private sector which has to lead the country. I said that when I was in the private sector. Now in charge of the Finance Ministry, I am very, very clear that we have to provide that enabling environment. Now, a lot of that enabling environment is going to come from various things. One, from our side, over a period of time, we have moved towards from import substitution, and therefore a lot of sort of tariff protection, etc. We move in a direction, and of course nothing changes overnight, but we have to directionally go in on that side. And then, quite frankly, the private sector also has to step up in terms of increasing productivity, not looking for protection going forward, and become internationally competitive. So as they say, it takes two. And both of these things will have to come together. We'll need to ensure that through the regulatory guillotine, etc., we sort of cut down on the red tape and everything else that's associated in ease of doing business. And then the private sector has to increase their productivity as we go forward.
I cannot agree more. On Friday, we will be discussing those issues. We have a deep dive on the importance of productivity of capital, as well as also why, not only in Pakistan, but broadly in the region, we are behind. I would encourage the audience and Mr. Minister, we would like to have you also with us discussing those issues on Friday. We have a session on that. Let me go now into more public finance. One of the key pillars is revenue mobilization in order to provide the state with more resources and also improve predictability about the medium term, as well as also strengthen the sustainability of the debt. What are your plans for the next 6 to 12 months? Do you see any issues? How are you, how do you feel the Parliament support to some of your measures? And so, including the provinces too.
Right, of course. So I think in public finance, there's a revenue part of it and there's an expenditure part of it. On the revenue side, as I said, if we have to move the needle from tax to GDP, right now it's hovering between 9 to 10%. We have to move towards 13.5%. So number of things which we are doing at this point in time. First of all, I just mentioned about untaxed, undertaxed. But in terms of enforcement and compliance, I think that's also very important. Pakistan is perhaps the only country on the planet where we coined a term called non-filer, which means I can give penalties and not get myself registered, etc. So in the money bill, in the budget, what we did was we took that penalty to punitive levels so that all of us who are non-filers think 3, 4, 5 times before we decide not to file or get registered with the tax authority. But now we are going to take it towards legislation, so that we get rid of the worm of the word non-filer, because whoever then remains non-filer will not be able to invest in property, purchase vehicles, open current accounts, do international travel, etc. So I think that enforcement and compliance is going to be very important. This other thing is end-to-end digitalization, because the more we remove the human intervention, it increases transparency, it reduces the corruption which is very much there in the tax authority at this point in time. In terms of seed money, facilitation money, the more you use data analytics and use the central utility to increase the revenues. So that's the second thing that we are doing. And then, of course, simplifying the processes as we go forward. So a number of steps which are being taken. And Jihad, I'm happy to say, early days, but the number of filers, I'm now talking year-on-year delta, have doubled in the last 12 months. So this means, we can't call it a success, and we cannot declare victory, but at least our direction of travel is on the right side. Now, revenue is very important. I mean, we increased our revenue by 29% in terms of our taxes last year. This year, of course, the program is front-loaded. I have to say that, because we have to show a delta of 1.5% this year. So the increase in tax revenues have to be close to 40%. We are essentially there in the first quarter, and we have to stay the course. But on the expenditure side, we also, that's the second part of the public finance, because when we increase the taxes, there's a whole discussion of social contract. What is the government doing to reduce its footprint, etc.? So we are moving the SOEs, especially the loss-making SOEs, into the privatization pipeline. We are reducing the size of the federal government. This is not the first time that we are trying to do that, but what we are doing this time around is more bite size. So over the last 3 months or so, we have taken 5 or 6 ministries. We have said, you come and present. What are your attached departments? Why you need to be around? And then we talk about implementation plan. So what we have been able to do is to say 150,000 vacancies are not going to be filled in the federal government going forward. And it has a real impact on the budget. Finance Secretary is sitting here because we budgeted for it. And therefore, it's a very clear signal back to our countrymen and countrywomen that we are serious about reducing expenditure. The last thing I just want to mention, pensions. And as you know, the unfunded liability on the pension side is a huge issue for Pakistan. But at least what we have said and done is that in this budget, we have said going forward, all colleagues in the government who have joined us from July 1 are going to be on defined contribution. So at least we have stopped the bleeding. We still need to take care of the stock, but that will take time.
Thank you very much. Another item that is a burden on the public finance of Pakistan, I would say even the Achilles heel, is the energy sector. What would you tell us that the government is going to do in the next 6 to 12 months to address one of the issues that not only is a big burden on public finance, but also one of the impeding factor of competitiveness for the Pakistani economy?
Yeah, indeed. As you rightly mentioned, it's both the availability and the affordability element that we need to deal with. Leakage is one common theme across the 3 structural reforms that we are trying to do: taxation, energy, SOEs. You can call it leakage, you can call it theft, whatever you want to call it. And we need to address all of this. So first, in terms of distribution companies. So over the last 6 months, what we have done, not a question of what we are going to do, we have changed about 90% of the boards of the distribution companies. And let me also tell you that it wasn't easy, because it might just sound here that everything is hunky-dory, we're coming in, we're doing. in the first 2 weeks, the Minister of Power, we tried to change the boards. And they said, no, there's a long way. You have to do an inquiry and then you can change the boards before you let people go. So we went into a presidential ordinance. That presidential ordinance got challenged in the courts. Then we went to the parliament. We had the law changed. And ultimately we brought people from the private sector, the SMEs. So now about 90% of the boards of the distribution companies are from the private sector, the SMEs. The chairperson is from the private sector. Political appointees and government nominees are now in minority in all of these boards. 3 of the discos are now in the privatization pipeline for phase 1. So that's what we're doing on that side. In terms of the generation, we are sort of moving towards both tariff rationalization in terms of negotiated settlements with the existing IPPs, but also moving towards renewable energies as well as we go forward. And then already the work has started in terms of competitive market in terms of energy buying, so that IPPs don't have to deal with a government monopoly. They will be able to go and sell in the market. There is no, again, Jihad, there is no single silver bullet through which we can fix this. It's a combination of all of this, whether it's taxation, whether it's energy, whether it's SOEs, it's people, process, technology. And we'll have to bring all of this together to fix this, and especially on the energy side, we need to provide relief to the consumers. But at the same time, we will not be able to get onto growth path unless we get this right.
Thank you very much. We are, with only a few minutes left. I have 2 questions. One related to the implementation. In EFF, it's like a marathon, 4 years of continuous work. But it requires a certain minimum speed, otherwise you will fall behind the objectives. And it's a teamwork. Do you feel that you are at the right speed, and do you feel that the people around you in the government and beyond are supporting your race?
So first of all, I would say is, because it goes back to your earlier question, why is different this time around? We are trying to and doing our level best to be very diligent, because one is sort of all the quantitative measures which we have agreed, but then also the structural benchmarks. And so we are following those structural benchmarks very closely. At the end of September, for example, is a very important one, the National Fiscal Pact. And one of the gentlemen who's helped us is sitting here right in the audience, and from one of the provinces, the advisor to the Chief Minister there. Wasn't easy. But we went around, and the Finance Secretary is sitting here, to all the Chief Ministers and say, if we are genuinely feeling that this is the right thing to do for the country, then we have to take whole of the government approach. It's not federation versus provinces or one province against another province. And therefore, I do believe it's a big achievement, haven't happened before in terms of signing the National Fiscal Pact with the provinces, which has revenue elements in terms of incentivizing the provinces in terms of the implementation of the agriculture tax. They have to move towards legislation so that they can start collecting agriculture tax from July 1 of next year, of the next fiscal year. It's expenditure sharing, where in terms of their development plans, what we've agreed with the provinces is that if there is an inter-provincial thing, of course, the annual development plan of the federation will pick it up. But if there's one particular road which has to be constructed in that province, then that province has to pick up that plan. I'm just giving you as one example. And the third thing is around governance. I mean, it took us a little while to come out of the grey list. So KYC, AML, sanctions, transaction monitoring, all of that good stuff. We can't afford as a country to ever go back onto the grey list. So again, with the help of the provinces, we brought that governance into it as well. So I'm very, very grateful to our Finance Secretary, because he is very diligent, and we are very determined to stay the course, inshallah.
Thank you very much. My last question is a bit a question of the moment. we are celebrating the 80th anniversary of the fund. And we're using this moment, well, the Bretton Woods agreements that created the fund and the bank. But also we are using this moment to think what the future should look like and how the fund can better help its members. You are one of the important members of the fund. What are your asks? I know that tomorrow we are going to have this discussion with the managing director, but what would be your asks, or how do you see the fund evolving in terms of helping members and also playing its role as a convening institution to maintain the global community, economic community holding together?
Right, right. So I would say, given my sort of experience over the last 6 months, first of all, my view would be, please keep on doing what you do well, which is a consultative approach. And I do think the dialogue that we've had, which has been very constructive, and I think this is the right way to go in terms of forging a partnership. The second thing is your role in terms of coordinating the concession finance and the bilateral partners. And I thought, again, the way, I mean, Nathan is sitting here as the mission chief, we are very grateful in terms of how the fund stepped up in terms of helping that coordination. But the larger bit, because we just talked about the structural reforms in terms of taxation, energy, and SOEs, and there are more which are there as well. But when I look at Pakistan, we have existential issues which we have not discussed, which is around climate change, which is around population growth, which is around child stunting. Because this is not about the next week or next year or next 3 years during the duration program. This is the future of the country. When the World Bank said, can we move from a $300 billion economy to a $3 trillion economy by the time we get to 100 at 2047, that's where I do think that the fund, in conjunction with other multilateral partners, can really bring all of this together. Not only the World Bank, but quite frankly also some of the regional players as well, where there is a real opportunity for the fund and IMF to come in and play a much larger role in terms of your mandate, in terms of also helping addressing some of these existential issues, certainly for developing economies.
Minister Aurangzeb, thank you very much for taking the time. Thank you very much also for sharing with us and with the audience your views about the reform journey that you are embarking in. We wish you all the best. The fund, as well as also other partners, are committed to support you in this journey. Also, I would like to thank your team for their availability and the support that they have provided to our team during the design of the program, as well as also now in the implementation. I wish you successful annual meetings, and we will be seeing each other soon.
Yeah, thank you. Thank you. Thank you very much.